Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, it would seem that the Australian dollar bears are not holding back as the current decline crushes through the 76.30 support overnight and now exposes the region of 75 cents. With the market slipping underneath 76 cents this morning, still gives further concerns that the bearish condition hasn't changed in terms of how the market has been selling off in the last 4 days and shedding over 200 points. At present, the support is seen at 75.85, and that has been the low briefly, but the market is now taking the low to 76 this morning. Therefore, we could see further weakness with 45 now the next target. Looking to the top side, resistance is seen at 45. The US dollar overnight surges, and with the index taking out the broad downtrend at 90.40, it now peaks at 90.99 overnight. Some of us may or may not know is that the dollar index is measured against a greenback strength with a trade-weighted basket of 6 major currencies. With the euro weighted at 57.6 and with the US dollar surging, it has put significant pressure to the downside. The key level at the moment is at 121.80, and we have held there with the low being 82 this morning. A break beneath this level of 80 would give further concerns and would take us to the next level that comes in at 121.30 with the measured move seen to a target of 118 the figure. Resistance on the day seen at 122.65. The dollar yen case still holding to a bullishness after a break of 107.70 yesterday. From the break, did trigger quite a significant amount of buy stop losses, with the market now currently looking towards the region of 109.15. We could start seeing some profit taking, so do be careful if you're trading from the long side in case we see a rejection from the top side of the range, which was seen around early January. And also the fact is that from the strength, we are getting slightly to an overbought condition, so therefore could easily see a rejection and look back towards 108.35. Well, the pound's losing streak continues overnight and now looks closer towards the region of 138, with the support at the moment holding at 139.05, sees the resistance quite high up around 140 figure 20. What triggered the market's bearishness was the comments by Bank of England Governor Mark Carney, who has tried to push away a rate hike in the short term. But I still feel that we are looking towards May as a potential rate hike. Therefore, could see a rebound from 138 and look back towards a 140 level. This would easily take us out of the oversold region. Well, it was seen gold has fallen back towards the bottom side of the range after losing another $13 overnight. But the support at the moment comes in from the last 2 stabs you can see here back in March and April, around 1,320. A break beneath 18 would give concerns and further stops down towards the bullish foundations of 1,300. But I feel the market is a little bit oversold, therefore we could easily see a rebound from current levels and look back towards 28 to 32. And rounding off with silver and oil, well, silver took a very heavy fall overnight, taking out the support of 85 and crushing now towards the region which currently holds at $16.60. I do expect to see from this region demand to return. I'm not overly bearish at these levels and I think the market slightly overshot its target. Nevertheless, we are at the bottom side of the range. Let's see if the market can turn around in the near term. And rounding off with oil, considering that the market hasn't slightly taken towards the Trump tweets, overnight, President Trump said that OPEC and Russia are keeping prices artificially high. He tweeted that looks like OPEC is at it again with record amounts of oil all over the place, including the fully loaded ships at sea. Oil prices are artificially high. No good and will not be accepted, Trump wrote in a Twitter. And also Electric Baker Hughes, General Energy report, said that last week on Friday that US drillers added another 5 rigs into the facility, bringing April the 20th the count to 820. This is the highest level since March 2015, underscoring worries about rising US output. So with Twitter, Trump, and also with General Electric Baker Hughes energy report, and also some divergence, could see the market take a tumble from current levels with a cap still holding at 70.72 and look towards a region of $66 a barrel. Well, that rounds up for today. Thank you very much for joining me. And as always, look out for the intraday report. And also, I hope you enjoy the rest of the day that's ahead.